They tried to deceive us about their gold, but many of us were not fooled by their shenanigans, and now major media outlets are starting to pick up on it, and it could mean something drastic and dramatic could be coming down the pike. Let's talk about it as we explore. For well over a year, there has been talk about China accumulating more gold than they are officially reporting. In fact, even long before that. But one major article was published, and I remember because I covered it at the time, from Jan Nieuwenhuis. And now a major media outlet has picked up on it yet again with a lot of the same information here. I'm going to be referencing the Financial Times about China's secretive gold purchases that have helped to fuel the gold rally. So we're going to get into that and what it could mean, especially with regards to a war footing that they are accumulating there in China. Before I get there, I want to remind you of channel sponsors Summit Metals. They have these cool wallets, and you can fill them up with either the 1 gram bars, 10th ounce gold, quarter ounce gold, half ounce gold, and they are just one of the only companies that actually the only company that has this for sale. It's of their own invention. So check it out by clicking on the link in the description below, and you can actually get a starter pack with a gram bar and one of these wallets there at their site. So check that out by clicking on the link in the description below. So China's unreported gold purchases could be more than 10 times its official figures as the country quietly tries to diversify away from the U.S. dollar, according to analysts, highlighting the increasingly opaque sources of demand behind bullion's record-breaking rally. Publicly reported buying by China's central bank has been so low this year, 1.9 tons purchased in August, 1.9 tons in July, and 2.2 tons in June, that few in the market believe the official figures. So that is just one example just recently. But, you know, there's been a lot of other things that have been happening over the past couple of years that have led people to be skeptical as well. And many of us in this community are wise to it. Analysts at the Societe Generale estimate, based off the trade data, that China's total purchases could reach as much as 250 tons this year, or more than a third of total global central bank demand. The scale of the country's unreported purchases highlights the growing challenges facing traders trying to work out where prices go next, in a market increasingly dominated by central bank purchases. Indeed, that is what is holding up gold's price, no question about it. China is buying gold as part of their de-dollarization strategy, according to Jeff Curry, Chief Strategy Officer at Energy Pathways at Carlyle, adding that he does not try to guess how much gold the People's Bank of China is buying. Unlike oil, where you can track it with satellites, with gold, you can't. There's just no way to know where this stuff goes and who is buying it. In fact, as you see on your screen here before you, you can pack a lot of value in a very, very small package. This is a 1 ounce gold coin, and it is double thick. It is high relief. And a very small package, over $4,000 worth of gold there. And even a 2 ounce gold piece is not that much larger than a 1 ounce in most scales here, as is the case here. So it is pretty amazing how the different variety and forms that gold can take and how it translates into that size proposition and how easily it can be moved in small numbers and amounts. But nonetheless, tons is a bit different, is a bigger deal, obviously, but keep in mind that it is a very dense metal, and even that is probably easier to hide, and obviously is easier to hide than the same amount of weight in silver or other metals. Traders say they are turning to alternative sources of data to gauge demand, such as orders for freshly cast 400-ounce bars with consecutive serial numbers, which are typically refined in Switzerland or South Africa, shipped via London and flown to China for evidence of the country's purchases. This year, people are really not believing the official figures, especially about China, according to Bruce Akimizu, director of the Japan Bullion Market Association, who believes China's current gold reserves are nearly 5,000 tons, double the level it publicly reports. Think about that. The United States has 8,133 tons. So they're getting much closer to the U.S., if you believe we actually have all the gold that we have. And by the way, there are a number of folks who do not believe that China has as much gold as they say they do. But I don't think that's the case. I believe now that they hold more than what they're saying. Central banks have been buying up huge quantities of bullion in recent years, fueling a rally that has pushed the price above $4,300 per troy ounce. The World Gold Council data shows that over the past decade, gold's share of global reserves outside the U.S. has climbed from 10 to 26%, making it the second largest reserves asset after the United States dollar. Yet fewer and fewer of these purchases are being reported to the International Monetary Fund, which collects data on a voluntary basis. In the most recent quarter, only about one-third of official buying was publicly reported, down from around 90% 4 years ago, according to the World Gold Council estimates based off of metals-focused data. Central banks may choose not to report their gold activity to avoid front-running the market, or for political reasons. Some fear that publicly buying bullion, which is often a hedge against the U.S. dollar, could worsen relations with the Trump administration. It makes sense to just report the bare minimum, if need be, for fear of reprisal from the U.S. administration, according to Nikki Shields, analyst at Swiss Refinery. Gold is seen as a pure USA hedge. In most emerging markets, it is in the central bank's interest to not fully disclose purchases. So other nations may be doing that as well. But I think there's something else greater as well. We'll get into that in a moment. Sellers may also be keen not to move prices against themselves, announcing their intentions. Former UK Chancellor Gordon Brown's well-publicized statements in 1999 that the Bank of England would sell half of its gold reserves helped push prices even lower. Indeed, it did. We call that Brown's bottom. And the sale yielded just $275 per troy ounce on average, about 1/15th of today's price. And when you think about that then, that was still a very low number back then. In fact, the prices of gold did bottom out around $252 an ounce. I remember it well, actually. Michael Hayai, an analyst at the Societe Generale, said this opacity makes the gold market unique and tricky compared with commodities such as oil, where the Organization of the Petroleum Exporting Countries plays a role in regulating production. What is different with gold is that the tonnage going in and out of central banks is so impactful. Without having clarity on that, it's a bit more of an issue. China is the world's biggest producer and consumer of gold, but also among the least transparent, leaving analysts to run up their own numbers based off of import data, guesswork, and tips. Its official gold buying program, which is managed by the State Administration of Foreign Exchanges, part of the People's Bank of China, has officially bought just 25 tons so far this year. Reserve gold is typically stored either in Shanghai or in Beijing. SAFE has 1 year and 5 year targets for the purchase of gold, and current holdings remain far below target, according to a former SAFE official. The purchases are made not only by SAFE and its intermediaries, but also by China's Sovereign Wealth Fund, CIC, and the military, which are not mandated to disclose their holdings on a timely basis. One proxy for Beijing's official buying is to look at UK gold exports to China, because the large bars favored by central banks are mainly traded in London. Using this method, Societe Generale estimates that SAFE will import about 250 tons this year. Another method is to calculate the gap between China's net imports and domestic gold production, and the change in the amount held by commercial banks or purchased by retail consumers. Using this method, Plenum Research, a Beijing consultancy, calculates a gap attributable to official buying of 1,351 tons in 2023 and 1,382 tons in 2022, more than 6 times the public purchases China made in those years. Complicating the picture is China's status as the world's largest gold miner. That is a huge deal, folks. Yes, indeed. Being the largest gold miner means that you can really hide a lot, for sure. That accounts for 10% of global production of last year, which means that it also has the option of buying bullion domestically for its reserves, and you can bet they're doing it. As China expands its gold holdings, it is also courting developing nations to store it in the country. Cambodia recently agreed to place newly purchased gold and paid for in renminbi. I covered that on this channel. And the Shanghai Gold Exchange vault in Shenzhen. According to a person close to the deal, the People's Bank of China and SAFE did not respond to the from Financial Times request for comment. Many gold analysts will not even hazard a guess as to the true scale of the purchases by the People's Bank of China. It's ultimately unknowable, according to Adrian Ash, and any apparent route to figuring it out misses the problem, and that it is only one part of the enigma wrapped up in the riddle that is China's bullion market, a mystery, but I think likely 10 times as a good guess as Jan Neuenhaus has made about a year ago at this point in time, and many people speculated that there are underreporting by China long before that, and likely probably this is going to be something that's going to continue for some time. But there is one person who has commented about this over at on the X platform, AJ Can, and this is pretty interesting about some of the motivations behind it. Why are they doing it? Well, they expect global financial instability, and we are in the midst of it for sure right now, and likely it could get worse, and that's a no-brainer. That's really why most nations accumulate gold, is because of global financial instability and the volatility with the U.S. dollar. Now, I don't know that that's really necessarily a key factor right now, but certainly it could be. Inflation is still here, and there are problems. De-dollarization is something that is continuing. So that is likely probably bolstering that. And they also expect risk of sanctions. Why would they expect risk of sanctions? Because if they invade Taiwan, and I think that's part of it, then that means that they're going to get sanctioned. And they foresee a long commodity bull cycle. Indeed, I agree with them on that. And they also want to strengthen internal monetary base, which means that if they accumulate enough gold, they literally could have a gold-backed yuan if they wanted to. And they very well could. Especially if they can get almost as much or as much gold as we have, why not do that? That would actually probably force us to do it too. But notwithstanding, they also want to strengthen, they want real assets for strategic reserves. And I'm telling you, with all the different reserves out there, with the breadbasket around all these other nations around the world, gold is the ultimate safe haven, especially considering that the Bank of International Settlements has designated it as a Tier 1 asset, putting it equal to and on par with the dollar in cash reserves. So there you have it. Fascinating information here. Amazing. And I'm telling you, I think likely all of these things, the sanction risk is probably one of the most important. And if they got gold, they're going to have power. And the sanctions will matter much less, especially considering how important gold is in Chinese society. Let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.